2, 1. Okay, so I'm joined by Gareth Lewis, the Commercial Director at MT Finance on the Game of Loans podcast. Thank you so much for joining me, Gareth. I can see that you're in very lovely surroundings. So it's a bit different from the last few that I've done. Well, it looks like everyone's in a bunker. At least you're enjoying the outdoors.
Exactly. I moved out of the garage that I was in earlier. So yeah, it makes sense.
Cool. Well,
enjoy some sunshine whilst it's out.
Yeah, I wanted to get you on, as we were saying just off air, because obviously there's so much going on at the moment, so many questions being asked. And I said to you, I seem to be spending more time now just answering people's random questions than actually doing any sort of day-to-day work. And you know, when I was thinking about lenders and trying to get people or a lender or someone from a lender on board to talk to, MT were obviously at the forefront of my mind, because you know, over the last 12 months or so, you guys really have upped your game in terms of the marketing you've got out. The brand is fantastic, and you've obviously put a lot of thought into that. And I wanted to sort of kick things off really by talking about MT a little bit and what you guys have been up to for the last 12 months. Obviously, you've joined the business, and I suppose we can use that as a way of getting into the conversation on tech marketing and how what you've done, I suppose, previously maybe put you guys in a good position for what's going on at the moment.
Yeah, look, MT Finance has been around for quite some time, you know, since 2008. So we're built out of the credit crunch. You know, what MT did very, very well was build a business that was predicated on service. It was always built around the service delivery, which is such a mainstay and an important part of the bridging world. So their business has always been built on that premise. Slowly building, growing, you know, getting to the point where it's built the business that is there today. You know, we took an evolutionary curve in the last 2 years as well to look at who we were, what were our core values. You know, when I came on board, that was one of the first things we asked ourselves is, who do we want to be? Where do we want to go? And what does that mean? You know, because it's quite easy to look at scaling up from a volume perspective, but losing your identity. You know, I think there have been some lenders that, you know, you could say have lost a little bit of what was the je ne sais quoi about who they were. So what we've always been mindful of and what we talk about at the beginning of every quarter and the beginning of every year is maintaining who we are, but have that evolution of growth. So you're quite right, you know, back end of the summer last year, we released our rebrand. Again, that was around remaining consistent with the MT philosophy or MT Finance philosophy, but just making sure people knew who we were. You know, dropping the finance into the MTF element was just to make sure the wider audience knew what that meant, you know, knew what we were all about. Getting a brand suitable to develop and evolve, go into potentially different marketplaces as we grow and as we get bigger along the way. So it's always calculated. I think any business you have isn't just fly by night. I think you have to look at what you're trying to do as a long-term goal and then work it back from there as well. Yeah, so obviously that's what we did within that side of it. Technology, as you say, plays a big part in that. Social interaction from a social media perspective in today's environment plays a big part in that. You know, we're not all brilliant at it. You know, but we try to do our best within what we know and how we understand to make it easy to really see who we are.
So, as you just said, and as I sort of mentioned at the beginning, it's quite noticeable that MT have really, as I said, up their game. I think is probably the best terminology to describe it. How, given the sort of the push that you guys have made in terms of your marketing, and probably in terms of maybe how that changes your systems as you maybe become more busy, how has that helped you, I suppose, with what's going on at the moment?
Look, very much so. We invested in a platform from a CRM system sort of about 2 years ago now, which has allowed us to build the infrastructure in place that everything can be done remote. It's an easy system where we're housing everything. A lot of lenders and a lot of businesses over the years in the specialist arena, and especially in the bridging space, were pretty much built on Excel spreadsheets. And that flavor of business has been built over the years on that side of things, which it's good to a certain degree, but as you quite rightly say, as soon as you start to go up the volume curve and you start to become more volumetric as a lender, you can't utilize that infrastructure to build upon and have slick process flow through it. It becomes a bit archaic when you're trying to move over various different platforms or various different sheets or whatever. So we invested, as I say, about 2 years ago in a CRM system that allows us to have that ability to have a clean and consistent journey, interfacing with the website, interfacing with the processing, the back office, so when a loan is live with us. So that what you've got is one seamless integration of a system that goes from a start of a transaction to the complete end, so the redemption of that transaction, where all the information is housed, so you can easily look at what's going on, you can find the documentation you need, you can review it easily without having somebody to give you a paper file or something along those lines. So it sort of makes sense.
So obviously you're working from home quite clearly. Is the entire MT finance team remote, or are there certain people within that process that you just mentioned that just have to be in the office no matter what?
No, every single one of us is working remote in varying different locations. So when the call was made, it's interesting. It's interesting from the perspective, from an infrastructure and ability, from a transactional perspective, we have everything we need at the touch of a button. We've all got computers that access the CRM system. We're obviously live on our emails. All our phones are diverted. So every single phone call that's coming into the MT Finance office is going out as it would normally. The interesting part of moving to working from home is probably the daily interaction you have with the individuals in the office. Yeah. So no longer can you just turn around and have a quick conversation with somebody, or somebody come to your office and ask you a question. You're now having to pick up the phone. So you have that bedding in period. Certainly, I don't know, Tuesday, somewhere north of 100 and something odd phone calls I had or made on Tuesday. Wednesday, again, very similar, where you're just talking about cases, you're talking about how things are finding it, how the staff are finding the interaction with brokers. Are they still able to interact easily with them? So you're just making sure everybody's going as you would expect them to do if they're based in the office. Yeah. But also, I think socially you have a responsibility to make sure people are sorry, the wind's picked up here.
That's all right.
Make sure people are able to function and are comfortable in the environment they're on. Some of these people are having to sit at home potentially as well on their own, with regards to social distancing, and then you're just having to make sure that they are happy within that side of things as well.
Well, I think that's something that a lot of people seem to be missing, is that I talk about the positivity of the fact that this horrible situation that we all find ourselves in, if you're going to try and take positives from it, whenever there is sort of this level of kind of adversity around in history, we tend to use that as an opportunity to thrust ourselves forward technologically. And I think, I'm hoping that this will be the same, even if it does end up being quite a short-term thing. But no one seems to, everything's okay, that's great, and technology improved, people can work remotely. But actually, sometimes it's nice to be in an office, isn't it? It's nice to have everyone around you. And I think maybe the longer this goes on, I think the more difficult the kind of the mental side of things becomes. Just sitting, not doing a lot.
Yeah, look, the social environment isn't made up of recluses. People are in an office job because they do like the social interaction. People are in the sales environment because they do like the social interaction. So then when you take that away from them and you have to ask them to do a job remotely over the telephone where they can't have a bit of banter, they can't ask people for their ideas or their suggestions on transactions without having to pick up the phone, it's a big sea change. It is a big adaptation that has to happen off the back of that. So we as business owners and people that are trying to run the businesses as well as the leaders within the marketplace have to make sure that we are keeping in contact with our brokers. Like you said, sitting there potentially very lonely, very frustrated, under a certain amount of angst. Pick up the phone, have a conversation, talk about what's it going to be like on the other side. Talk about what's going on in their lives, the daily element, maybe not always talking about the virus per se, but just see how things are going. And I think that's the responsibility of a nation, is to look after the other people, the acts of kindness, the checking out how people are dealing with the strains and stresses that come with this.
Yeah, and do you know what? Actually, I watched something not that long ago before I'd even heard of the word coronavirus, funny enough, but there was somebody talking about how you could get into a really nice habit of once a week, just randomly scrolling through your phone, clicking on a contact and just calling that person. And by doing that, you reach out to people that maybe you haven't spoken to for years, because you've got to the point where people don't expect people to pick up the phone randomly and call. I mean, I've got into an awful habit where I text people a lot of the time before I call them to see if they're free to take the call. And when you think about that, that's nuts, isn't it? You can go back 5 years and people never did that. So yeah, I think that's quite a nice idea to just
yeah, it is. It's interesting when you've come from a sales background, when you've got a load of random numbers in your phone that you probably would, spin the wheel and end up going to somebody you possibly don't even know properly. Be an interesting conversation to have when they're going, sorry, why are you calling me? But yeah, I get the premise, isn't it? Yeah, just saying, well, thanks. Yeah. Find out it's a plumber from 15 years ago.
Yeah. I mean, I'm sure you'd have to maybe condense them down into a smaller group of people that actually would remember who you are. But but talking of adaptivity, is that even a word? Adapting.
We'll use it.
Yeah. We'll take that. Adapting. One of the things that we've seen lenders doing a lot in the last, I suppose, week and a half or so, in terms of adapting to what's going on at the moment, is changing products quite rapidly, and lowering LTVs is one thing that we've seen quite a lot of. I suppose, firstly, do you think some of these measures are correct, and are lenders maybe jumping in a little bit too early, or do you think some of these measures are good for the longevity of business? And where does MT fit into that? What are you kind of thinking from a product perspective over the next few weeks and months?
The phrase that everybody utilises at this moment in time is talking about business as usual. If I talk about us for a moment, we are trying to maintain this business as usual. At the end of the day, we are still in a position that we can function on a daily basis, being able to transact business. We have the infrastructure in place that means that, our day-to-day jobs might be slightly different because we're having to pick up the phone more to individuals within the business. But what we have an ability to do is to still transact business, which is the key fundamental. Yeah. I think, in a tricky environment, whether it be Brexit last year, whether it be the credit crunch in 2008, and whether it be now the virus. Now, a good lender has to take each day as it comes, and you have to look at the landscape around you. Look at what are the comfort points. Where can you run a successful business, maintaining your ability to function, maintaining your ability to support the broker and consumer community. Look, don't get me wrong. I don't think you can quickly go up the risk curve here. You can't suddenly offer products where you're turning a blind eye to what's going on in the world. I think you have to address every single transaction as it comes across your email or your phone call and say, okay, what is the deal? Why does the fundamental of the deal need to work? And then you look at the risk points around it. And a good lender has to mitigate risk as well. I don't think a lender would be doing their job if they didn't look at the environment we currently sit in and have an element of caution in certain situations. Because unfortunately, the biggest fundamental issue for the virus at this moment in time, or the impact of the virus, is no one knows how long it's going to be. At the end of the day, how long are we all going to have to work from home? How long are we going to have to self-isolate for and take that responsibility from a community point of view? We just don't know. They're saying, somewhere in the region of 12 weeks before they start to push the virus back, as it were. But if you've got people that are not listening to what they're being guided on, does that have a ramification that means that 12-week extends to 18 weeks? Yeah. We don't know. And the impact of it and how it's felt within third parties, valuers being able to go out and value properties, solicitors being able to transact with their clients. These are all implications that a social lockdown will have with the marketplace. And again, businesses and lenders alike have to be able to work around those parameters to say, how do we get infrastructure in place that supports the market still, being sensible with what you're doing, but also works within the limitations that you face through what's going on with the virus.
Yeah. So it's
Look,
has MT got any plans to dramatically change your offering from a product perspective? You know, are you looking to slash LTVs as lots of other lenders seem to be doing? Are you looking at increasing pricing as a lot of other lenders are doing?
No, look, certainly that's not on our radar. That's not something we are discussing at a management level. What we are discussing is being sensible. What we are discussing is supporting a transaction where we can. What we're not going to do is make a silly lending choice whilst the market's not necessarily there to support it, and the market as a whole from that perspective. Yeah. So I think, look, we built a business on service and service delivery, and that means being able to have an ability to adapt at the moment you need to adapt, offer products that are solutions for that transaction, for that moment in time. You know, be fluid and flexible and commercial about what we're doing as well. And that's the key fundamentals of the bridging space as a whole.
Yeah.
You know, we're not going to turn around and you know, jump off the cliff, but what we are going to do is continue to support the broker market with, you know, responsible lending decisions. And I think that's the key element here.
Well,
you know, anybody that makes a rash decision without understanding. Sorry, say that again.
I said that's very good to hear from a broker perspective. Yeah. We're not. I'd say there's a few lenders I've been speaking to recently that, you know, I love talking to lenders, and I like to think maybe more than quite a lot of brokers out there, I try and have the lenders back a lot when it comes to potential clients, and really just try and make people understand that lenders, whether it's Barclays Bank at the very top, or, you know, a small family office bridging lender at the very bottom in terms of infrastructure, they're all businesses at the end of the day, and you have to look after yourself as well.
Yeah.
So, but not all. I feel as though at the moment that quite a lot of lenders are taking that maybe a little bit too far and not thinking about the broker market, not thinking about customers, just thinking about really protecting themselves. When ultimately, and I know you guys, you know, your funding lines are exceptionally strong for a bridging lender in terms of where you sit in the marketplace. You want to get that money out the door, and I think there are some lenders potentially out there forgetting that to get that money out the door, those relationships with their customer base and their broker introducers as well need to be pretty strong.
Yeah, look, and business has to run. You have to run a sustainable business. Business has to be sustained past this point of what we're sitting at now. So you have to be sensible. But the premise of bridging finance has always been on the basis of common sense approach to lending. You know, it isn't a computer generated transaction. It isn't a credit score generated transaction. This is somebody understanding the deal, understanding the mechanics of the deal, which are all the points in case. You know, why does somebody want the money? What are they offering as security? What's the value of that security? And then what's their exit route? The same fundamentals are happening now as they always have happened, but you just have to have an element of caution when you are lending as well, because what you don't want to do is put somebody in a position where they're entering into a loan which doesn't make sense for them and doesn't make sense for anybody. So it's sensible lending decisions using the common sense that we are blessed with, and obviously maintaining that flexibility and commerciality when it comes to a transaction as well.
Yeah, I mean, earlier on you mentioned
science.
No, it isn't, but people do tend to the nature of overcomplicating things sometimes, I suppose. Don't they? So it's good to hear that at least some lenders out there are doing what I think is the right thing. You mentioned two people earlier on that we as brokers and lenders have conversations about all the time. The two S's, surveyors and solicitors. Starting with surveyors, the problem that I envisaged early on in this was we may get to a stage where surveyors just can't go and see properties, and that could cause a slowdown. I've given the example to a lot of my customers and clients of during the summer months we tend to have a few, you know, the surveyors are thinner on the ground, and therefore we have to wait a little bit longer to get surveys booked in and reports back. And like I said, I think that's where we're probably going to be headed with this. But Now speaking to a few more lenders and a few more surveyors, that doesn't seem to be transpiring at the moment. What seems to be the issue are the fact that a lot of people thought that we might be moving to a more sort of online style valuations and AVMs, which I'm being told is not necessarily going to be an option because the data for the current market just isn't available to be able to do that. And secondly, that a lot of surveyors that maybe have gone out 1-2 weeks ago are then getting back in touch with lenders to say, actually, what I've said 2 weeks ago is no longer valid. Have you guys come up against any of those two problems just yet, or do you envisage that becoming a bit of an issue?
Look, valuations is always going to be an interest model at this moment in time, because as you quite rightly say, a valuer has to try and gain access to a property to value it. What you're finding at this moment in time is obviously people are self-isolating. Valuers may choose to take the choice of isolating themselves because they maybe fall into the vulnerable category as well. So obviously you then run the risk that there'll be a depletion in numbers of valuers being available. So these ramifications are always going to have an impact, because ultimately you need somebody to go and view a property to then provide you with a value of that property, and to provide you with the eyes and ears on that property as well, sense checking from that perspective. So it is obviously something that we are more than aware of, that as this journey goes on through the social distancing, through the implementation of what the government wants us to do, there may have impact or ramifications on the availability of surveyors to go and visit properties. As a business, you're always looking at what you can do to help. So obviously we're in regular dialogue with our valuers to make sure they do have the capacity, that they are still trying to see people. What practices have they put in place to safeguard themselves? What practices have they got to put in place to safeguard the applicant or the tenants within the property, whoever it may be. So these are the things that you as businesses in the background are continually monitoring to make sure you have that ability to work on each transaction. So there is that key element, but fundamentally there are parts of that you can't control from that side. Whether a valuer is looking at the values now and erring on the side of caution, of course, because again, we go back to the unknowables. We talk about the fact that we don't know how long this situation is going to continue to affect the marketplace. So the reality is they have to be sensible again with what they're doing. So we talk about being a sensible lender, we talk about being sensible brokers. A valuer has to also use that sense check, use that experience, that wealth of experience that they have, to be able to determine where a value will be, and where that value will be at this moment in time, and where that likely value could be impacted moving forward. We all know that the retail space in the commercial world is probably going to get hit reasonably hard because of shops and businesses maybe not being able to sustain moving forward. Pubs and clubs and restaurants are always going to have an income issue moving forward at this moment in time, because obviously they've been told to close. So these are the things that you have to bear in mind, a valuer has to take into consideration as they're coming to their values. We don't know what's going to happen in 3 months' time. We don't know what's going to happen in 6 months' time. I think reasonable signs are that when we do come out the other side of this, the reality is that the infrastructure and ability for property to bounce back and for property transactions to bounce back is there to be seen. The government, in my mind, is doing a fantastic job with trying to support the everyday person from an income perspective, supporting businesses throughout this cycle as well, so that they can get to the other side of this intact and being able to move forward again. And that's the big thing. That's the ability to move forward as a nation and as businesses and as individuals. That's the key element that they are trying to safeguard from that perspective. But it's a age-old thing, isn't it? Surveyors is a poison chalice.
As I said, the two S's seem to be the two things that are the uncontrollables throughout any kind of transaction. More so, I think, with bridging than standard mortgages. Purely, I think, because the legal side of things is a little bit more complex, and I think it just requires a bit of extra experience on the surveyor side, on the solicitor's side. And from a surveyor point of view,
Sorry, somebody was just trying to call me.
no worries, still, I get that, don't worry.
Yeah.
From the surveyor point of view, you want someone to be quite quick, but sort of going back onto them, the solicitors, you mentioned about potentially it might be an issue in terms of face-to-face meetings and this kind of stuff. But I mean, I've come across it certainly in the past where certain lenders are so very rigid at the moment, or have been, for face-to-face meetings with solicitors, signing paperwork, all of that kind of stuff, and that is a bit, and has been traditionally a bit of a mainstay of the bridging world. From your perspective, I know I've certainly had a bit of leeway from you guys in the past on it, which I've always been very thankful for. Do you think that might start to become a bit more normal across the rest of the market, or do you still think that we're going to struggle, and lenders in particular might struggle with that?
Look, I think again, we talk about adapting. I think what you'll find out of this is more and more lenders will have to look at their infrastructure, look at how their system supports transactions, look at how their processes and criteria support transactions as well. Because ultimately, when your back's against the wall, you have to be able to turn around it and use your common sense, as we've spoken about before. Use your ability to adapt to certain situations to find the best solution. So I think as a matter of course, it's something we've prided ourselves on over the years, is maintaining that commerciality and maintaining that ability to be flexible with what we do and how we do it. Look, take each case by its own merits. We are in a privileged position that we as lenders have the ability to shape our destiny when it comes to the transaction flow and how we process that transaction. I think the larger lenders are always governed a little bit by the fact they're a bigger ship, so making fundamental changes within a business is always going to be somewhat harder. So I think having that ability to adapt to a situation might become more a bigger piece in their jigsaw. Not having to turn around and sit there and say, I've got a 3-month window to make changes. They turn around and say, okay, I can adapt to make a change now. How do I go about it? So yeah, I think you'll see some lenders look at evolution pieces and how they can evolve their businesses to be a bit more fluid, a bit more flexible with what they do. Fundamentally, it's a mainstay of bridging, that flexibility. And it should always remain a mainstay of bridging. Otherwise, it's fundamentally slightly flawed.
Absolutely. I talk to my clients often about the sort of the bridging triangle, which one corner has speed, one has pricing, and the other has flexibility. And I always say it's very unlikely that you're actually going to be able to get all three of those at any one time. But you're absolutely right. I think of those three, the most important two certainly are the flexibility and the speed. And I always try and talk to my clients about that, say, look, I know that you're always after the cheapest funding. We're all after the cheapest funding, but not at the expense of the other two. And sometimes, unfortunately, you do lose clients as a result of that, because they're so fixated on that pricing that they don't realise that actually by going with a lender that's much more institutionalised than maybe the smaller bridging lenders, who can be a bit flexible. That ultimately they're not going to get it done in a time frame that they need to get it done with. So you're right. I think bridging lenders in particular are always going to be at the forefront of that flexibility, because that then is conducive to the speed as well.
And I think even before we talk about the coronavirus and the implications of that, I think the market as a whole was probably on a bit of a knife edge when it comes to service delivery and price, which is which is the best route to go. Because look, we don't transact in the regulated space, but obviously I have a vast amount of experience in that space, and I think that's a big push on that side as well. Because if you look at the compliance verification of what's the best deal for the client, they're always going to go down a pricing point. But then, is that actually best for the client? If you have a transaction that needs to be transacted with an element of flexibility, with an element of speed orientation, is price always going to be best for them? Not always. So it's being able to look at, that's why experienced brokers should always look at the bigger picture, and they do look at the bigger picture of what is the fundamental key element for that transaction. Is it speed, is it flexibility, or is it price? If it's price and they've got time on their hands, it's easy. If it isn't price and it's a mixture of the both, then you find somewhere in the middle where you know you're going to get both elements to a certain degree.
It's funny actually, because you mentioned, obviously, I know your background has been where there's been quite a heavy element of regulated bridging and funding, and that's where a lot of brokers start out. I myself, for years and years and years, I did residential mortgages, which almost stole my soul, but I managed to move on a little bit. But it is funny how I think that when you have that regulated background, covering off those bases, I think, becomes a little bit more important. And I do think that there's maybe has been in the past a little bit too much of, just saying, this is the best lender for you, but not really making the client really truly aware, and maybe not building a file from a compliance perspective as a broker to really zone in on that. And I certainly, even with unregulated cases, I pride myself on almost making them regulated cases from a compliance perspective, and actually highlighting in there that this was not the cheapest lender available by any stretch of the imagination, but they were the cheapest who could actually do this deal for X, Y, and Z reasons. And I think that's important even for brokers and clients and borrowers to understand and get their head around, because I think it's just conducive to a better working relationship throughout that transaction. I have found in the past, and I still do from time to time, that clients that haven't got that right at the very, very beginning will continually throughout the process, throughout that single transaction, keep going back and saying, are you sure this is the cheapest? Are you sure this is the cheapest? Is there no way that we could get it any cheaper? And I think it's just really, really important to try and get that mindset right at the very beginning of the client, that we're not going for the cheapest and there's a reason why not, because otherwise it just causes disruption throughout the entire transaction.
Yeah, I think you're so spot on. At the end of the day, it's all about delivering them what they need, and if their need is the cheapest, but it doesn't matter about anything else, then that's easy. Right. If it's a mixture of the both, as I said earlier, or it's the other way, you need that complete flexibility on the transaction, then it's a whole different thing. And a broker's job and responsibility is to find the best solution for that client at that moment in time.
It's funny, I actually say to clients quite regularly, which a lot of them are quite surprised when I say it, is I said, if pricing was your biggest issue, you and I wouldn't be speaking, because there's either a lot of places online that you can probably come across the cheapest deal available, and the criteria is not going to be a problem, so you can just apply for that yourself, or there's going to be a ton of brokers out there that concentrate on that side of the market where they're just looking for the cheapest option. Where I've already positioned myself is that I will be able to deal with the more complicated issues and find the solution that maybe some other brokers might not be able to. But that's not to say that I'm better than them or they're better than me. They're much better at a certain part and I'm much better at a certain part, and that's why that client has found their way to me. And then subsequently, in terms of the lenders, why certain clients will find themselves put in front of an MT Finance or someone similar. That,
of course.
You're not the absolute cheapest in the market. You're not actually that far off, to be honest, and you can probably price yourself a bit higher given the service that you get. But you know where you sit, and that the clients coming to you should know why the MT is the best solution for that problem. Just like they know that I would potentially be a better solution broker-wise than maybe someone else.
Yeah, look, and it's the responsibility to not to pretend that you're something that you're not. You are there to provide a service as a broker. You're there to provide a service as a lender to that transaction and that client. So it's just about doing what's best for that deal at that moment in time. Absolutely. Looking at every deal on its merits.
Completely. And you started to almost read my mind earlier on when you started to talk about what might be happening in the future. And I was going to start maybe wrapping things up by kind of asking you about your predictions. And I've written down on my pad in front of me as you were talking targets, because I remembered this and thought, from a lending point of view, obviously it'd be great to get your insight as to where you think the market is likely to be, both property market and lending market over the coming weeks. But longer term, the effects that might have, long-lasting effects. But then also talk a little bit about MT and what your targets were kind of for the year and how they might have changed because of what's
happened. You almost want me to get my crystal ball out here. Where the markets Yeah, exactly. It's incredibly hard to even say where I think the market's going to go in the short term, because we just don't know. We don't know what's going to happen over the coming weeks. We don't know if we are going to be in a full-blown lockdown, in the coming days. Sometimes you hear the rumours that we're going to be, others say, no, we're not. Um, and this the timing. We just don't know when this is all going to end, and that's going to be the big factor. If we're having to sit around and listen to the guidance and do what's best for the community and the country as a whole, where that takes us in the coming months and weeks and months, should I say, we just don't know. So I think I'd be doing a disservice to turn around and say, well, this is my prediction in the next 3 months. I think as a whole, if you take stock of where the property and where the financial market was at the beginning of the year, I think there's a lot of pent up want to have a good year. Last year was very interesting from the perspective of Brexit was dominant all the way through, and it was a very stop-start year. 1 minute Brexit's going to get done, then it's going to be prolonged, then it's going to get done, it's going to be prolonged. So there's a lot of frustration for businesses, especially in the property side of things, where you were always just waiting. So the beginning of this year, January was very good. The signals were that we were going to get that Boris bounce that everybody had been speaking about. And certainly that was most lenders' thought process, where this year is going to be a very, very good year. People are going to be able to concentrate on what they want to do from a business perspective, from a transactional flow perspective. Property investors were going to continue to look to make the right purchases at the right time, take advantage of certain situations, look to develop property, enhance property, that kind of stuff. So I think from a longer term point of view, I don't see that that pent up want changing. I think underlying within the property transactions and the property professionals, they still have that desire to do a transaction, to transact in property. It's inbuilt in our DNA. As a nation, we want to own property. It is a fundamental. So I see that maintaining. But we've just got to get to that other side. We've got to get to the point where people can go about their lives again and go about transacting as they would have wanted to have done all the way through the year. We will probably see, quite a nice jump back up, I would have thought, where people will go out and spend money, people will go and look at transactions, people will look to try and go and buy new homes throughout that side of things. So the property cycle will continue at some point, but it's just at some point. When will that be? I think that's the key fundamental. But there's still going to be the desire, there's still going to be the want to be busy within the property cycle, without doubt.
Well, I was saying to a client on Friday, and then a lender this morning, who was talking about, well, it started because my client slipped up and said, "Oh, I think we're heading for a credit crunch." And I said, "Do you mean credit crunch?" He was talking about recession. He said, "Oh, no, I meant recession." And then the conversation ensued in that we're not going into a credit crunch, because it's very different to a recession, because the liquidity in the market is just so great, and lenders are desperate. I'm certainly have felt that for at least a couple of years, that lenders are absolutely desperate to try and get that money out the door. And you mentioned earlier about kind of the price war that was happening, and I think certainly from a bridging perspective, we can't get much cheaper. The margins just aren't there, and so then it has to be about other things. So I suppose that's a positive, and I've mentioned to a few people that we do have a strong government, whether you're a Tory supporter or not. It's good that we've got a good majority. Brexit looks like the decision has kind of been made, and although there are a few things up in the air, it's pretty much that's quite solid. The pound is still relatively cheap, so foreign investment should be up there. And so actually, and this might be very, very controversial what I'm about to say, in years to come, we might be looking back on this period and say this is where actually the UK really did bounce back, and because we were able to maybe become much more economically stronger, like quicker, than 90% of the rest of the world because of
Yeah.
the foundations that have been laid in place.
Yeah, and I think that it's a very good point. You know, we, provided we, you know, as we touched on earlier, what the government are trying to do and how they're trying to support businesses and individuals through what they've been announcing over the last week is very, very good. You know, they are trying to support the marketplace from an individual point of view. You know, they're trying to make sure people have money and have a job to go back to, which again is a big fundamental. Because, you know, before this happened, you know, unemployment was, you know, almost non-existent to a certain degree when you look at recent times in terms of the figure work. So the reality is, the back of this is, if we can maintain that nice element from that side of things, and we can maintain people's ability to have a job and have an income coming through the structure that the government have put in place, then there's no reason why we can't see that bounce back.
Yeah.
People will be nervous, of course they will. You know, it's a big situation that people are going through at this moment in time. This isn't just about money. This is about lives. So, you know, there are people, by the nature of the beast, are going to sit back when we get through this, and it is the when we get through this, and go, thank God, I need to now take stock, put certain things in place for myself, for my family, and then move forward.
Yeah.
They will want to move forward.
Yeah.
They
Well,
will certainly want to put it behind them.
I was going to say that's a pretty positive point to maybe finish things on. I've tried with every other one of these that I've done to end on a positive point, and the last person I spoke to, she couldn't. She just would not allow me to finish on a positive point. So I'm happy that we managed to do that. But look, Gareth, I'm really appreciative of the time that you've given up.
No, that's fine. Thank you very much for the opportunity.
So thanks so much for doing that. But in terms of those that are listening and watching, how can they get in touch with you via sort of social media or work-wise, if they want to? What's the best way?
I am on social media. My interaction on social media isn't particularly brilliant at times, but obviously I am on LinkedIn and I am on Twitter. I think it's Gareth Lewis 25, because I'm still trying to remember that I was 25 once on my Twitter. But obviously, from the perspective of the consumer, whoever, they can get in contact with me by yourself. That's probably the best thing.
Well, good work. Well, in the show notes and on YouTube, I'll make sure that in the notes there'll be some contact details for you as well if you want to get in touch with you directly. But Gareth, look, as I said, thanks so much for your time today and your insight, and stay safe and good luck.
Yeah, Andrew, take care.
Cheers.